What's good, YouTube? It's your boy Zay, and welcome to the very first episode of Setup Sunday for 2022. Happy New Year, everybody. I know it's been a while. It's been a while since I've been on camera. I feel rusty. So work with me as we get through this first video 2022. Like I said, it's been a while, man. I missed y'all. How have y'all been? Like I said, I feel like, sheesh. What am I even supposed to be doing? Nah, so today is, like I said, the first episode back. What we're going to do today is, in the main part of the video, we're going to walk you through my 2022 market expectations for the SPX. That's the main purpose of this video, is to just focus on 2022 market expectations. We're going to look at, okay, what do we think the high of the year could be by the end of the year? If we have some lows, what is that going to be? So we're going to lay all of that out. But before we get into that, I do want to lay out a couple of expectations going forward. So what could you expect? So first things first is that I have a couple new series. So this will be the main series, Setup Sunday. And how this is going to work is that I'm going to have these videos come out at the end of the month. So after the monthly close, we'll do updates and talk about, okay, this is how the month went and this is what we think for the next month. As well as I'll drop a video mid-month right after OPEX Friday. So that's the third Friday of every month. I'll drop another video as far as just updating the charts and just like based on our analysis to see where we are based on what we talked about at the beginning of the month, right? So those are going to be at least 2 videos every month that you can expect from me. Another one that I think is pretty cool is I'm going to do quarterly performance updates. So I'm going to share one of my portfolios with you guys and show y'all, okay, this is how I perform on a quarter date basis. So that'll be 4 videos in a year, right? Get them every quarter. And I'll even do, like, I'm gonna provide guidance. It's gonna be like my earnings report, right? So y'all can hold me accountable. I think that's gonna be a pretty dope idea. So I hope y'all enjoy coming along for that ride. As well as the last thing is I'll go out and in between then, I'm gonna have a bunch of other updates. A few people have been asking about my Rule of 4 update, like my STEMI challenge update. All of that stuff is still going. I just got behind and never had time to really film it. I wanted to let things progress. And so watch out in 2022 for a lot of updates on those type of videos as well. And then of course, people have been asking for me to do a couple of other trading concept type of videos, so I'm gonna get those out this year as well. So I got a lot of stuff in store for 2022. So you're gonna want to make sure that you press that subscribe button as well as like this video. See, I ain't forget that. I still got it a little bit. But go ahead, press the like button, press subscribe. I appreciate y'all rocking for me. And the last thing I didn't even mention is that welcome to year 3. This is my 3rd year doing YouTube, so we're gonna make this the best one yet. Definitely want to be more consistent. After my first year of fatherhood, I now have a set schedule, more of a set series of how I'm going to record and get content out to you guys. So 2022 is going to be a big year. I hope 2021 was a great year for y'all as it was for me. And enough of the rambling. Like I said, make sure you press subscribe. Make sure you press that like button. And without further ado, we're going to go ahead and get into the 2022 market expectations.
All right, fam. So like I said, or like I mentioned in the video, today's video, we're going to focus solely on the SPX or the SPY, the S&P 500, the market overall, because I really want us to grasp like, okay, let's look at the market overall and look at the big picture, as well as you could take what I'm about to do and replicate that with any chart. So it's going to be, it would be too much to just keep replicating it and going through. But, maybe I'll do one more to just show you how fast you can do it. But we're going to focus on the SPX. And what we're going to do is we're going to go through 2022. I'm going to walk you through my thought process so you can ask yourself these questions and figure out what are the main levels you need to pay attention to and give yourself a 2022 roadmap. All right. So if you're ready, let's do this. So starting with the yearly open, 47.66.19. This is the yearly open. This is going to be the number that we base everything off. Okay. So for the market overall, I have the expectations, or I think that, hey, at minimum, I think the market should give us at least a 10% net positive return at the end of 2023. So what does that look like? If I think the market is going to give us at least 10%, all I need to do is multiply or take the yearly open and multiply by 10%, right? So I get 52, 42, 80, and I'm gonna mark that on my chart because as we do this, we're going to mark these levels just so we have a point of reference, right? So that was 52, 42.80. Type that in. Boom. That's my end of the year target, right? Now, we also got to look at the downside because we probably will have a pullback or a correction or something like that in 2022 as well. So my expectation is that at worst, my worst thought would be that the market will pull back anywhere between 10 to like 13%. They might really push it, right? So what I'm gonna do is I'm gonna give you the 10 and 15% range. So that gives you a zone to kind of say, okay, this is that like area where the buyers better step in and we can't go below these levels. So same thing, what we're gonna do is, and because I'm gonna be conservative, I'm gonna base it off the yearly open. Because the thing is that we could make a new high in the beginning of the year and do the correction from that high, which would, raise the floor a little bit. But if we be conservative, say, hey, we don't even make a new high before we correct, that will give us that ultra bare low of we can't go past these levels. So I just hope y'all understand what I'm doing here. So 4766.19, let's say we get a 15% correction, right? So we would times that 0.85, right? So that gives us 4,051.26. I'm gonna put that on there. And y'all are gonna notice how, based on percentages, how like this stuff aligns to like support and resistance levels so closely. Like it may not be 100%, but it's gonna be pretty damn close. I guarantee you that. So that's our first line in the sand right here, right? First line in the sand that we really don't want to get this number up. Now, the second one would be, let's just say we do 10%, right? Because that's really the average is 10%. So times that by 0.90 and you get 42.89.57. That level should be very familiar because that was right where we was at like October lows. So just FYI, crazy how that works out, right? Oh, hold up. And that was 42.89.57. Boom, look at that. Look at that. Would you look at that, right? So now you have my 2022 trading zone, right? And I'm gonna highlight it because I have some other levels on this chart highlighted as well, but really what those are just other yearly opens, right? So when you look at this 32.45, that was the open for January 2020. And I'm sorry because I actually removed a level. So the yearly open for here was 32.75. Sorry, let me add that back in. 36.75 in 2021. 37.65. I'm sorry, 37.65. I'm gonna put it right there. Yeah, so these are just yearly opens, 37.65, 32.45, and it's 24.77 are the past 3 years. And then we have the close here in that. So we're going to assume that the market is going to open at this 47.66 in 2022 when it comes to Monday. But what we've pretty much done here is given us an area that when we zoom in, we now know, okay, like this is the area that I expect the market to trade in 2022. So I figure at some point by the end of the year, we'll hit this high, but maybe before we get there, before the, in the middle of the year, we'll probably hit, this low or this low. So I could do another thing where I'll add a vertical line in here and say, I expect that before July, the summer, I expect for us to make our yearly low, right? And I expect for the yearly low to probably come, at these levels of 42.89. However, if that doesn't hold, we could see us possibly dip and tap this 4,051 before ultimately find a true level of support. As well as I think by the end of the year, this is where we should end. So this really tells me where I should be buying and where I should be selling as we go through 2022. It is really that simple. You guys seeing how I just use percentages, right? Now, here's how we can even define it even more. So for January, what do I expect to happen in January or the first quarter, right? So let's break down market expectations on the SPX. So for the first quarter, we typically know that January is kind of hot, and then that February and March are usually bad months, right? We have March quad witching. So based on our yearly open, let's say that somehow the market manages to push before we, we really, get a correction or anything, because it's carrying momentum, right? So let's just look at this momentum. We were up 6% here, 4% here. So let's say the market in January can somehow muster the will to put up another, say, 2.5 to 3%. All right. So we take the yearly open, and let's be conservative. So let's just say 2.5%. That gives us some leeway, times 1.025. Thank you. That gives us 48.8534. Let's go ahead and add that to the chart. So, boom. That's going to be 48.8534. That's 2.5%. So this gives us the target, our money line, right? That's why I want to take some money. This gives me a target of, say, 2.5%, right? So that's like, okay, if I think the market can do that, and I'll give you a high. Let's do 4%, because the market might be on some steroid-ish, and you never know, right? So you always want to be prepared for what's the max. So 49.56. Whew, that's beautiful, boy. If the market could do that, right? That's what we talk about. Go ahead and give us a good 4%. And 4% can actually happen. If you think about it, right? Let's say we do 2% in January, and then it musters another 2% before it does the real pullback in February. That can happen, right? So these are the two areas that, okay, first quarter, meaning March, because you got January, February, March. Like this should be our high. I don't think the market can go no higher than these two levels in the first half of the year, basically, right? First half of the year, I don't think we go no higher than these levels. And again, I think we will pull back to eventually these levels. So that's a pretty big area to cover, right? So these are going to be some big moves, which means it's going to be a lot of volatility in 2022, a lot of volatility, right? And so if you want the other next level you could also do is we have our 10% pullback. Let's do a 5% pullback, and that'll really give us one more like ground level to watch for. So 466.19 times that by what's that, 0.95? That'd be so that'd be 45.27. Whew. I hope some of these levels are ringing, like, are just like, man, how in the world did they get right there? 45.27. And I think that takes us, look at that, well, December lows, right at the high of September. That's crazy, right? And now that's another line in the sand. So now we got all our area. These are potential buy spots, right? You want to buy potentially here. You could potentially buy here because that's 5%, that's 10%, and that's only 15%. And then you have yearly open, and you got your first half targets, and you got your end of the year target sitting up here waiting for you. And now you have pretty much everything you need for 2020, or everything I need for 2022 to kind of formulate, right? So it's like, all right, as we progress, and we'll do updates, and we'll talk about the market. And like I said, you can literally do this for every chart. So we're going to just focus on the SPX today. So in the first half or the first quarter, right, if we expect the market to give us at least 4%, then we know, okay, then we should be looking to take profit, or again, take profit around 48.85 to 49.56, right? So this is where it kind of changes up, right? Because we have these worst scenario impact levels. Now, what I'm gonna do is I'm also going to throw in a few other levels as far as if we retrace from our new highs, because that's what possibly could happen is instead of retracing from the yearly open, we retrace to from those highs, and I wouldn't want somebody to get stuck waiting. So if we go from the 40, and actually I'm going to use my calculator again because I don't want to misjudge or represent any numbers. So if we do 4885 as that new high, right? So that's target one. So if we do a 10% correction from here, now mind you, I'm not going to do a 5% pullback for these, because when we make this new high, I'm automatically assuming 10% correction is coming. So if we just 0.90, that's going to give us 43.96. So that's basically 4,400. So let's go ahead and throw that on there, right? Let's throw 4,400 on there. Actually, we're going to do the exact number, which was 43. 96.80. Look at that. August lows and July highs. It's ironic how I'm using percentages, but look where the numbers are ending up. Crazy, right? So that was a 10% correction from target one, right? And just to kind of prove it to you, target one, we go to 10% and it puts us right on our number. You see that? Boom. All right, now let's do a 10% correction from the 49.56. 3 times 0.90. 4461. 4461. Go ahead and add that in there. All right, so there you have it, right? So again, more support areas as far as if we pull back. So if we make a new high here and we're looking to do a 10% correction, brings us right down to that 446, right? So going to bring us right back into where we kind of were under, right, just under December's lows, right? And then we'll be kind of right above July's high point, right in that mid area, which is definitely going to be a good area to kind of just like boom and stop us and pick us back up. So basically what we have now outlined are all the impact levels for 2022. So you can really just map out your entire year. When if SPY gets here and here, take profit, buy puts. Wait till you hit these levels to cash out your puts and to flip to buy calls. You don't do anything in between. It really could be all that simple in 2022 because it is going to be a very, very choppy year. So for this setup Sunday, I hope that you guys found value in walking through my market expectations for 2022. As I said, I'm going to be bringing updates. We're going to do an update every like end of the month. So when we close out the month, we'll have we'll do updates to kind of update us then. And then we'll also do one after every OPEX for the monthly. So you'll basically get 2 videos a month as far as market updates, right? Because we'll focus on, okay, this was the end of the month. Here's where we think we're going. And then OPEX will do updates as well to say, okay, how are we tracking based on those projections we talked about in the beginning / end of the month. So again, man, I hope y'all enjoyed this video. Like I said, I'm back. I'm bringing a lot more content. I'll have updates on, you know, my journey. A few people have just asked me to do other videos as far as just different trading concepts that I have learned or that I actually do myself and incorporate it. So we're gonna get into all that this year, 2022. So I appreciate y'all rocking with me. As I said, you could take those, basically the exercise I just did was using percentages to figure out your levels and placing them there for any chart. And it'll work out great. So again, I appreciate y'all for sticking in with me. We're gonna have a great 2022. I will catch y'all in the next episode. Until then, stay blessed. Peace out.